Our philosophy at Sigma Funds Management is to focus on value first, and value from both a relative and an absolute perspective. So stock may be cheap, but unless we can find an absolute upside, we may not necessarily own it. It may be cheap for a reason. Secondly, we then look at the business risk associated with that individual company. And then once we've done that assessment for both risk and upside, that's when we can make the trade-off between risk and return. And we think that leads to superior risk-adjusted returns over time. To put it simply, we focus on value first, and then we look at risk. Most of our peer group looks for good ideas, irrespective of the risk associated with it, or they like a story so much they're prepared to own it, irrespective of the valuation. We also focus on both absolute and relative valuation, so there must be absolute upside, not just relative upside, or being cheap compared to the market. And this differs from those quant-driven strategies focusing on smart beta or having a value tilt. Our time horizon is shorter than perhaps most of our deep value peers. We focus on a 2 to 3 year time horizon, where most of our deep value peers will focus on a longer term 5 to 7 year investment horizon. We believe as a value manager, you really got to achieve those returns within a 2 to 3 year period. Within the small caps team, we have 3 individuals focusing on individual sectors. The average experience is about 23 years amongst the 3 of us. But we also leverage off our large cap team. We have a team of 4 large cap analysts, and from our perspective, they've got 27 years of industry experience. They're sector specialists. So we leverage that experience as well. That works well when stocks move in and out of the top 100. So we have a continuous flow of coverage when stocks come down, and they help generate ideas into the small cap portfolio as well. So things like Sims Group, things like Covermore, stocks like Rural Co, and more recently Tegel have been advocated by our large cap team. So you're not just getting the 3 small cap specialists, you're getting access to the whole Sigma investment team of 6 investment professionals. I've been doing this for a long time now. It's 22 years of actual investment experience for me. Started in 95. I've been specifically doing small caps since 2002. So I've been around for quite a while. You can show from my grey hair. Small caps has been my bread and butter for the last 16 years. I just love it. It's just great. The variety of businesses you get to see, the different management teams, and following a business over time and seeing how it evolves. It's been a great experience from that point of view. For the small cap fund, our objective is to achieve a return of 5 to 6% above the Small Ordinaries Accumulation Index over the medium term. We believe the fund is suitable for those investors who are looking for high returns, but need to be patient given the volatility you have in small caps. So a 2 to 3 or 4 to 5 year time horizon is more appropriate for that sort of investor. And you definitely need to have patience because we are trying to arbitrage time. Sigma Funds Management was started in 2009 by 6 investment professionals who used to work together at Credit Suisse Asset Management. So we've been together for more than 10 years now. It's 51% owned by Azimut, which is a leading Italian fund manager, which has a market cap in excess of €2 billion. The remainder of the business is equally owned by the 6 investment professionals. We think that's quite unique within the Australian investment landscape. Not many of our peer group have equal ownership among the actual investment professionals. What we have found over time is that leads to better cooperation, better idea generation and flow between the teams, both large cap and small cap. And we believe it leads to the best outcome for the investor because we're all focused on delivering the return for the investor.